Hello everyone, welcome to the Trade Breakdown on EU. As always, we're gonna start off with the daily time frame, and we're gonna see what's going on there, right? Now, if you remember the previous breakdowns on EU that I had made, then you'd remember that I had this Monday candle low or this CRT low is my short-term down liquidity for the previous week, right? And as I said in those breakdowns, is that as soon as this Monday's candle low is taken and it's reached my next higher time frame down liquidity, right, or my next time target for price after that would be the CRT high or this range high right here, right? Now, if you haven't seen that breakdown, then you should watch that one first, and you'd know exactly why I expected price to hold here and to expand from here once this Monday's candle low is taken. Now, for a student, they're gonna get it right off the bat, right? And for those of you that don't know the answer, then the answer is that first of all, we've got this bullish daily range, right? And right around here, we've got the equilibrium of the bullish daily range. And you can see we've got this Monday CRT low and this daily FVG inside the discount region, right? Right? And we know that whenever price rebalances a range like this and it reaches a discount key level, inside a bullish daily range, it always ends up expanding towards the long-term trend liquidity, which for me in this scenario was the range high right here or the Monday CRT high. And you can see that's exactly what happened here during this week. Now, obviously, we know that our objective and goal on the daily higher time frame is to first of all determine our trend liquidity, our higher time frame trend liquidity, and to determine our buys for the day, or which we also refer to as our daily buys, right? Now, after doing all of this, we'll have three choices, right? When we do our analysis, we're going to end up with three choices. One of these three choices. Either we're going to determine that our buys or non-liquidity is higher. And in that case, what we're going to do is we're going to make sure to trade it only in that particular direction towards the upside, right? Or we're going to determine that our non-liquidity is lower, and in that case, you know where you trade to, right? Obviously, in the downside or towards the bearish side. But apart from these two situations or these two scenarios, there's going to be other times where you'll face conflicting scenarios where the price isn't showing you anything significant or impactful, right? And you'll have conflicting thoughts about price, right? And you wouldn't know where price is potentially headed to. And in that case, your objective would be to just stay away from the charts and just do nothing, right? That's what we refer to as waiting patiently for your setups, right? Pretty simple. If you don't see anything significant in the charts and you don't know where price could be headed to and you have conflicting thoughts, then in that case, just stay away from the charts. Don't mess up with the charts, right? Now, as soon as this week opened, right, I skipped Monday because of two reasons. First of all, I was traveling, and second, Monday didn't show me anything significant, right? Now I discuss that in a minute, but these were the two reasons. That's why I prefer to stay away and not mess with the charts. And I decided to come back tomorrow to find a potential trading opportunity, right, or a setup. So obviously I had already determined my round liquidity on the daily time frame, which is this range here right here, right? So my objective on the daily time frame is now done, right? And now what I need to do is to find a CRT on the 4 hour and then use that CRT to position myself towards the higher time frame down liquidity and trade it on the lower time frame, right? That's my objective as an intraday trader. But before we move lower to the lower time frame, first of all, you can see that we've got this order block right here, and it's pretty obvious exactly why this is deemed or considered as an order block, right? Because it purged liquidity in the form of purging the Monday CRT, but not only that, it also filled liquidity in the form of testing this daily FVG, which was in the discount region. So when price closed above the open of this candle right here, right, uh, from its open down to its lower wick, this candle become an order block, right? Now, if you ask me why I didn't choose the whole candle as an order block, or why didn't I choose the other one candle right here, right? And why did I choose the open? Then that means you haven't studied properly, right? And you aren't being diligent with the content. And if that's the case, then you should first of all watch the order blocks chapter, like, right, the mini chapter that I had made on order block. And when you watch that video, then that will clear up most of, if not all of your confusions about what order blocks are, right, and how they work and how they are formed and how you should trade them, right? So make sure to watch that order block chapter. So on the daily, I also had this key level in the form of this order block, which I was looking for it to be tested during this week on Tuesday for price to react off of and expand from, right? And you can see that's exactly where price reacted off of, and it expanded higher to take out the range high. Now let's go down to the 4-hour time frame and let's find a CRT there, and let's see how I managed to find a correct CRT to position myself, right? So you can see all of this price action right here. Now I've already discussed most of it in the previous breakdown, but if we look at right here, you can see that we took out this low, and also along with that we got this CRT right here because it's just above the high time frame key level, so this candle can be treated as a CRT. And not only that, it was purged at key time, so this is our CRT, which price used as a key level to expand from, right? Now what you can see right here is that during Monday we did not do anything significant at all, right? And the reason why I'm saying it is because you can see that this CRT high, right? You can see this CRT high, and on Monday we just stayed inside of it, right? Without doing anything, right? So I stayed away, but then on Tuesday you can see that what happened is, first of all, we took out the CRT, this CRT high, this 4-hour CRT high, which is our initial target, but our target doesn't end there, right? We've also got this range high, which is our main priority, is our target, and then we've got the other range high right here. Now this range high is far off, but the initial main target for price is this range high right here, which I was looking for during Tuesday, right? And you can see what happened during Tuesday is that price reacted to this CRT high, and then it had this KOD, or this kiss of death sequence, on the lower time frame. And now the reason this is a KOD and I deem and consider it as a KOD or kiss of death is because it's the last counter move in the opposite direction before the drawn liquidity, which is this range high, is met and reached, right? And then during London Open, you can see that this candle right here entered at the daily order block and tested it. You can see everything is starting to get together, right? Now obviously the only thing that I'm doing is to find a candle which I could potentially treat as a valid CRT, right? And then when that candle is purged, I would then trade it on the lower time frame and try to position myself towards the higher time frame down liquidity, right? That's my sole purpose as an intraday trader, and that's exactly why I'm looking for a CRT on the 4-hour time frame, right? So you can see that this candle tested the daily order block and the daily key level, and not only that, it's the 1 a.m. candle, right? And all of this price action happened during London Open. So after this, I started expecting a London lunch reversal profile right from here, and I decided that I'm going to treat this 1 a.m. candle as my CRT. Now you might have heard from me this before, and let me say it again. Whenever price reaches a higher time frame key level during London Open kill zone, right, or the price action during London Open kill zone, then the most likely outcome for price after that is to reverse during London lunch or New York Open. And you can see that's exactly what happened here. Price tested the higher time frame key level during London Open price action, and then during London lunch it reversed from there, right? So as soon as this 4-hour candle closed, I decided to take this candle as my CRT to position myself, right? And I waited for and looked for it to be purged during London lunchtime to look for an entry there. Now let's go down to the 15-minute time frame and let's see what we've got there. Now the most important part is determining your drawn liquidity and finding a CRT on the higher time frame, right? Taking entries is the easiest part. Once you've built all of that higher time frame narrative and you've determined your drawn liquidity correctly, and not only that, you've then also find a CRT there, a correct and valid CRT there, then taking entry based off all of that isn't going to be that hard for you, right? Because the hardest part is determining ground liquidity and finding a CRT. Taking an entry on the lower time frame is the easiest part. You just have to position yourself there. You can use any entry model. You can use a turtle soup model, a model 1 entry model. You can take an entry from a breaker block, whatever, right? So remember, make sure that your focus should be on refining the art of the higher time frame, right? And the lower time frame will bear the fruit for you, right? It's going to be the byproduct for you. Now, right here you can see the opening and closing times for the day, and you can see that during Asian range we formed a ranging profile, right? And below this range and this ranging profile, we've got a higher time frame keyword in the form of the daily order block. And it didn't tested it during Asian session, right? Price action didn't tested it during Asian session. So for that reason, you would have expected an intraday normal protraction profile where the manipulation profile tests a key level during London Open or London Lunch, and then price reverse from there and expands from there, right? And you can see London had this kind of manipulation profile lower and tested a key level, this high time frame key level, and then price expanded from there during London Lunch explosively, right? That's how you catch expansions on the lower time frame. And this is exactly how I took my entry here. We had this order block which purged the CRT low and tested the daily order block, and once this candle was engulfed, it became an order block, and I took my entry there, open up this order block with my stop loss below the order block, and I targeted the higher time frame drawn liquidity, right, which was first of all the CRT range high and then eventually the other range high.